We believe the next step going forward will be the tokenization of financial assets.
People like Larry Fink, CEO of BlackRock, coming out and effectively shilling the idea of tokenization as the future of finance. When you have someone of that caliber talking about this concept, it just becomes normal.
The total crypto asset value is $2.4 trillion. You're talking about 16 trillion. That's a crazy amount of assets to bring into this ecosystem. Will this be the biggest thing to hit the blockchain?
I do think it is. The great thing about real world assets, it's legitimately net new capital coming into the space rather than just a small group of DeFi whales who are farming and leaving and continuing to make the rich richer. That's exactly the opposite of the crypto ethos. A lot of the things that we're building at Mantra actually solves that problem. We're trying to create an ecosystem that you can participate in new different types of diversified investment opportunities like private credit, like real estate, maybe even more products than you didn't have access in the Web 2 world, which becomes a net benefit to the ecosystem as a whole.
You've been doing this for 4+ years. You guys went from under 100 mil val and crossed the $1 billion mark, which is a huge accomplishment. Do you believe that if you never quit, you will always win?
Yes. Now is an opportunity for me as a founder to leave my mark. It's just been one of the craziest years of my life. I just get out of bed and I don't ever feel like I'm working, I'm just living. If we do what we're supposed to do, which we will, we'll be incredibly successful, the community will be incredibly successful, and we'll leave the world literally a better place.
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is This is London Real. I am Brian Rose. My guest today is John Patrick Mullin, the entrepreneur, investor, and blockchain expert. You are the CEO and co-founder of MANTRA and have spent the last decade investing and building in the crypto and digital asset space. MANTRA is a layer 1 blockchain for real-world asset tokenization with the goal to bridge the gap between traditional and decentralized finance. You are on a mission to become the world's preeminent and most trusted ecosystem by bringing security, compliance, and democratized access to DeFi. You believe we are witnessing a transformative moment in finance, where tokenization is bringing these real-world assets, or RWAs, onto the blockchain and unlocking a $16 trillion industry. You've said that tokenization has the potential to revolutionize traditional finance and will redefine wealth distribution on a global scale. John, welcome to London Real.
Thank you so much for having me, Brian. It's a pleasure. Looking forward to the conversation.
Yeah, let's just jump into it. Look, Bitcoin just broke 71,000 and it looks like it's going higher. And yet the total crypto asset value is only $2.4 trillion. You're talking about 16 trillion, and you even said before, it's even bigger than that. You know, that's a crazy amount of assets to bring into this ecosystem. It'll dwarf all the value now. Maybe you can talk about how big of an opportunity this is. Will this be the biggest thing to hit the blockchain, the biggest narrative, you think, over the next couple of years?
Yeah, I mean, honestly, I do think it is. It's going to take some time. I think if you're looking at, tokenization on permissionless, public blockchains, it's still a drop in the ocean. I mean, I think we're talking like less than 10 billion of tokenized assets on permissionless blockchains today. So still a long way to go to dwarf that, 2+ trillion that we have for the broader crypto market. But if you look at institutional tokenization, JP Morgan, my namesake JPM, has done, I think, $1 trillion of tokenized asset transfers on their permissioned private blockchain JPM Onyx. So you can see that the institutions are trying this thing out in a more, closed loop fashion. But I think we're seeing the tide turning, and obviously we're excited to hopefully play a big role in that.
Yeah, you made a really good point, because what is RWA? I know you hate that term, and we're going to get into it, but there's all sorts of things. People might think of real estate. Financial assets are interesting. I mean, it could be horses and all sorts of things. But let's talk about the financials, because like you said, JP Morgan, BlackRock with their BUIDL network, all these people, Franklin Templeton, they have been tokenizing these financial assets, some on, like you said, decentralized blockchains, some on their own internal ones. Maybe talk about how much activity there's been and how surprising that these institutions are embracing it. I actually started my career on Wall Street in '93, and I was trading fixed income derivatives. So I was trading tons of treasury bonds and futures contracts. And so I'm surprised that the banks and BlackRock are this ahead of the curve. I thought it would take them years more.
Yeah, I mean, I think the floodgates opened, the beginning of this year with the Bitcoin ETF approval. It really just solidified that, hey, this asset class, crypto assets, not even just tokenized assets, crypto assets are here to stay forever. And now you can actually have it at, major financial institution level. I think the other thing that was really important, and we've seen this shift throughout this year, was people started actually not talking about it in public is taboo. And fortunately, you had, people like Larry Fink, CEO of BlackRock, coming out and talking about tokenization. I refer to him as Uncle Larry because of what he does for RWAs and tokenization, going on CNBC every once in a while and effectively shilling the idea of tokenization as the future of finance. And when you have someone of that caliber, of that pedigree, of that level of a financial institution talking about this concept, it just becomes normal. And that normalization of the idea has really given a rise to, a lot of things that we're working on. But if you, again, go back to that kind of base level of where these things are existing today, it's still just a drop in the bucket. And that's important because you've seen people now feeling comfortable talking about this in public at an institutional level. And that's brought a lot of people who honestly would have laughed us out of the room, honestly, even earlier in the year, the ability to start talking about it, investing in it publicly, taking bets on it, these type of things, which has been really important to help, bring the real world asset tokenization, space forward on these permissionless and public blockchain networks like what MANTRA is. And there's still, like I said, a long way to go. The real world asset, asset class of just pure crypto tokens is still minuscule. I mean, I think there's maybe only two or three tokens that have over $1 billion market cap. We're one of them. But there's still many different projects, many different protocols, many different apps that need to be developed before this really becomes the thing that, we're expecting it to become.
Yeah, Larry Fink has been a godsend. I think Michael Saylor jokes that he's the chief marketing officer for Bitcoin. Now you're making a reference, maybe he's got two jobs. He's the chief marketing officer for RWA as well. But it's been amazing. I had Anthony Scaramucci here in the studio a few months ago, and he tells me about having a conversation, I think in Davos in a hotel lobby with Larry a couple years ago. And he said, look, he said to Mooch, Mooch, you like Bitcoin? I don't. And Mooch was like, look, I really think spend 10 more hours, 20 more hours. And I know he's got a really great team over there of some younger guys as well that really embraced it. And now I think they own over $27 billion of Bitcoin through their ETF. And it's amazing to see Larry on Kramer telling him what it's like. Sometimes he's not even the most articulate about it, but he's pushing it forward. And he even calls out the dollar, which is crazy because people say JP Morgan and BlackRock are extensions of the US government. I won't comment on that, but it's amazing that he says, look, this is an asset you might want to bet on if you don't trust your government's currency. So yeah, that's been really helpful. And I guess it's helped you a lot. You know, when it comes to RWA assets, do you think the majority over the next 12 months will be financial assets? So tokenized bonds and stocks. And do you think that's what's going to bring the initial users on? Do you think it will then get out to real estate, or what else is real world assets? Because it can mean so many things.
It can definitely mean a lot. Anything under the sun can be tokenized, but we say regularly that doesn't mean it should be, at least today. And, I think a lot of people have gone for many of these kind of niche and or, totally illiquid assets with the expectation that creating a token with, makes it more liquid immediately, makes it more attractive to investors. And that's just not the case. It really needs to go down to first principles of actually creating value for the issuer and then also value for the secondary market participant. Where we've seen a lot of traction is actually on three verticals. One being real estate, and I can dig into that a little bit more in detail. Obviously, being in Dubai right now, that's probably the place where this is going to take off. That's where we're betting that real estate tokenization is going to take off for a number of reasons. Financial assets, as you mentioned, money market funds, private credit funds, private equity, these type of things are definitely of interest, and you're seeing traction of these things being tokenized at institutional levels on permissionless blockchains like BUIDL, as you mentioned earlier. And then the other one that I think is really exciting, we're exploring but haven't done anything too much yet is actually on IP, whether that's related to musicians, sports teams, artists, things that have a really emotional draw and massive fan bases. And I think those three asset classes in general, one, have the ability to have big dollars behind them, but they also are things that people understand and or are already investing in, right? You understand your favorite musician, you understand your favorite artist, you understand your favorite sports club, just like people are already buying money market funds, already buying private credit funds, and they're already buying real estate. And I use the example of, I think there's interesting use cases for tokenizing more niche items like watches and, rare cars and whiskey and wine. But honestly, how many Rolexes do you need to tokenize $1 billion worth of Rolexes? That's a lot of Rolexes. And, that doesn't make it a lot easier to just say, hey, I can go down the street and, tokenize $1 billion of real estate in Dubai. It doesn't really work like that. But there's a big difference there, right? You can talk to one developer and you can do $1 billion worth of real estate versus, God knows how many Rolexes would be, $1 billion worth of tokenized assets. So I think when we're exploring this space, we are seeing where the traction is. And frankly, it's my job as a founder to say, okay, traction's here, double down. Traction's there, double down. And hopefully this becomes a little bit of like the spigot unleashing, where then once you have a little bit more proliferation of these bigger assets, people are actually bringing new sources of liquidity, new sources of capital on chain. You're starting to have secondary market venues where people can trade these things, which has never really happened before. Then you can say, hey, okay, now let's tokenize some watches. Now let's tokenize some Pokemon cards or, something rare that is a little bit more niche, because there's now new on-chain liquidity for something that maybe, hey, you do want to have a little diversification, or it's just something to speculate on a little bit because, hey, I do like watches and I do like whiskey and I do like Pokemon cards. But in the end of the day, the majority of your portfolio most likely will not be in those types of tokenized asset classes.
Yeah, I think that's super important. I mean, you have to go where the liquidity is. One of the biggest criticisms of blockchain in the last few years is, we build the tech without a use case. And so, yeah, we dream of these things of having your watch on the blockchain and it sounds amazing, but then it doesn't really have a use case and then it doesn't go anywhere. So I think the reverse engineering, the product market fit is not always the smartest thing. Talk to me about Dubai, because I just got back from there a couple days ago. I'm a huge fan of the place. I'll be back in January. We'll move our studio there for a few months. And I know you've announced some cool partnerships there. I think you've done a partnership with the Real Estate Empire Mag. I think you're talking to a bank called Zed Bank over there as well. And you've announced a few other even partnerships with Ondo Finance and some things. Why Dubai? I'm having a recollection that Dr. Marwan Al-Zaruni, who runs a Dubai Blockchain Center, who actually gave me my golden visa, so I'm a huge fan of him for that. He had told me one time, he said, Brian, every property here is on the blockchain. And I was like, whoa, I didn't even expect that. And so I'm just wondering if you chose Dubai because they're the city of the future, they're forward thinking, they're completely digital, or did you choose it for other reasons? And what are you actually doing there?
Great questions. I mean, I think there's a number of reasons why we felt Dubai was a good home, but maybe I'll tell you the story to kind of get there. So, initially when, we're building Mantra is a 4-year-old, actually over 4-year-old project now. And it's gone through a number of different iterations to kind of our current status quo. And at one point in time, we were actually looking at other different markets for where we could operate compliantly, effectively. And it just ended up becoming a very slow regulatory process there. And this was actually in the United States. Obviously, when, FTX imploded and you had all of the other, big blowups of the last cycle, it slowed things down. And, I think people are still searching for how they can operate, how they can build crypto businesses in the United States. Because of that kind of slowdown, honestly, we looked in other different markets of where we could operate, and we just needed a place literally to operate. We were looking in Europe, we were looking in Asia, we looked in other places in the Middle East as well. And really Dubai was just the place that honestly opened up at the right time, and we were just in the right place. We felt that there was a really strong progressive regulatory framework of how we could operate here. So we started going through the process working with FARA, which is obviously the regulatory authority for digital assets here in the Emirate of Dubai. And we've really seen a very kind of like open, progressive mindset about how to actually embrace this technology, how to create, different types of products and frameworks that maybe are, new and haven't been done before. So that mindset is really important. And I think it's also because it comes from the top, right? It comes from literally the leadership of the country that says, hey, we need to be forward thinking. We need to be progressive. We need to embrace this technology, and we need to become a global leader in it. And I think that combined with timing, combined with, honestly, just people coming there during COVID, during the pandemic, a lot of people flocked to Dubai. Good weather, interesting nightlife. It's a fun place, great food scene. And people just could actually go on living their lives here during the pandemic. So you had all these crypto people coming in, you had all this, regulatory stuff happening at the same time. And, it just became a home. And eventually it also became a home of where we set up some offices, where we have team. And a lot of our investors, our biggest investors, are based actually in the UAE, in Abu Dhabi, and Dubai. So we've had a lot of support here. We're really, almost locally homegrown, even though I technically live in Hong Kong. So, we're in between Hong Kong, Dubai. We had the testnet, the Dukong testnet, which is for Dubai and Hong Kong. Obviously now we're in mainnet. So that'll continue, but, a little bit different today. And it's been a really, supportive place for what we're trying to build. It doesn't mean that everything's easy. It's taken a lot of time, a lot of effort, a lot of relationship building, but it's been a really beneficial thing for us to be here. And, some of these different partnerships that we're working on, as I mentioned, like beginning of the year, they would laugh you out of the room. I don't mean necessarily our partners, but, some of these other, if you're going into another jurisdiction, another place, you're not going to be able to have the type of outcome that we were able to get because of our network, because of our connections and our relationships here. And it's become just, in our opinion, the place for real world assets that's going to, put it on the map where you can actually have real use cases, real liquidity, real composability first. Obviously, Wall Street, the US is still kind of the golden goose, but, until that, kind of eases up or maybe the ice melts a little bit there, it's going to take some time. So I think it's really well positioned for those reasons. And, obviously we're excited to be a part of it here.
Can you talk about what you might be doing with MAG, the real estate people, or Zanbank, what that might actually look like? I'm also curious what you think maybe one of the first actual real estate use cases would be. Like, what are people actually doing with it?
Sure. Yeah. So for example, MAG is one of our strong real estate partners. We're actually tokenizing one of their new off-plan developments here in Dubai called the Katura Reserve. So effectively, the product is, a tokenized note where you're actually participating in the financing of this off-plan development. You're going to be able to get paid in both stablecoin, so an attractive, I believe it's 8% in stablecoin on an annualized basis, plus an additional kicker in our native token OM. So I think it will end up being roughly between 13 to 15% for this product. It's over collateralized. It's collateralized by the land that the development's being built on, which was purchased years ago and has gone up so much in value that the whole value of the land is worth more than the note itself. That's just Dubai for you. It's over collateralized by a key real estate asset from MAG Group. So it's like a $70 million mega mansion. And also it's guaranteed by the issuer, which is MAG. So, multi-billion dollar, conglomerate. It's a pretty safe investment, just not financial advice to your own research, but we kind of structured it in that way. So it's kind of meant to be a bit of a home run and something of significant interest. But then because it's tokenized, actually what you're able to do is not only participate in the financing, but also be able to then convert that into the equity of the home at a pre-agreed discounted value to the present day value once the home is completed. And these are really luxury developments and really key properties in the UAE and its development here in Dubai. So it's a pretty interesting and attractive product. Some of these things that we're looking at with Zan Bank. So they're, owned by the chairman of Emaar, actually. Emaar is obviously the largest developer in the UAE. So, there's no limit to the amount of real estate opportunities here in the UAE. And, we're fortunate that we have a number of different strong partners. But Zan Bank is obviously a big financial institution. They're one of the digital banks here, although they do have actual physical presence, but a digital bank that's focused on, SMEs, crypto businesses. And they're, obviously very receptive to Web3 technologies and are doing things like crypto custody. I think they want to do a number of different Web3 initiatives. So we're, obviously collaborating with them as one of their, blockchains of choice effectively. And it's just it's a really interesting ecosystem here to be a part of. Real estate as a concept. I mean, I go quite public and quite adamantly saying that just tokenizing SPVs to own something and then fractionalizing it, you could do that in the Web2 space. So I think trying to create really interesting products, trying to create something that's actually new and moves the needle, and that might include collaborating with the government to actually change the regulations, change the framework so that you're actually moving the needle in that instance. But these are the things that we're interested in and that we're trying to do because it actually does, tick those boxes. It actually benefits the issuer and it ends up being better for the end consumer. And if those two things aren't met, then we're not going to tokenize it, basically.
Yeah, that's a good metric for making that decision. Look, I know a lot of people in Dubai have made money investing in off plans. It's something people have done the last 5 years. But I guess to do that, you have to buy an entire piece. There's probably no liquidity in the meantime, and there's no way to tokenize. With what you're describing, could I buy in for like $1,000 or $10,000 potentially and get a small piece of this opportunity? Or would I still have to do kind of a unit?
Nope, you could absolutely buy a portion of it. Does not need to be an entire unit or entire property.
And then anyone around the world could do it
parts
as well, right? I wouldn't have to be in Dubai.
100%.
That's a beautiful thing.
100%.
All right, and I can get a high yield, not correlated with crypto. That's exactly what we need, isn't it? Yeah.
That's our bet. Okay. That's what we think.
Interesting. Yeah. I just had the founder of a company called Names in here, and they're doing something similar with the insurance business. And Dan's a really interesting guy, and he had a similar offer. He's like, look, you can get yields in the teens to invest in insurance and reinsurance that's completely not correlated really to anything, not the economy, not crypto, not whatever. And I guess that's maybe another type of RWA play. But that's really exciting for crypto people because when we look at crypto, everything is usually highly correlated to this market and the success of this market.
100%. I mean, I was at a family office event last night, and one of the questions was like, with the success of Mantra, like, how do you think about managing your own wealth? And the first response was like, it's irrelevant. I'm all in Mantra. I'm long myself. I'm long Mantra forever. But that doesn't mean that it's not important to think about. And honestly, like a lot of the things that we're building at Mantra with respect to real world assets and tokenization actually solves that problem of being able to actually have an on-chain ecosystem that you can participate in new different types of diversified investment opportunities, like private credit, like real estate, like XX, et cetera. There's so many different things that currently would require a lot of friction for me to, take wealth out of the out of the crypto ecosystem off chain and put it into a bank, put it into a brokerage, put it into, whatever. Friction, tax, time. These are all things that no one wants and no one has. And in this case, we're trying to create an ecosystem that even when you take profit within the Mantra ecosystem and the on-chain kind of economy that we're developing, you can still just plug it right back into all these different products that you'd want, maybe even more products than you didn't have access to in the Web 2 world, which becomes a net benefit to the ecosystem as a whole. So it's much different than this like the empirical farm and leave mentality. It's actually farm and stay and keep contributing and continue to farm and continue to stay. It's like this reflexive circle that we want to create. And that's the great thing about real world assets is it's hopefully legitimately net new capital coming into the space rather than just a small group of, DeFi whales who are, farming and leaving and continue to make the rich richer. That's kind of exactly the opposite of the crypto ethos, right? So, hopefully we're able to create a product and create an ecosystem that supports that. And I think one of the things that we've seen that actually shows a little bit of validation of that idea is many of the people who are, participating as like real world asset TVL, supporters, have literally never done anything in crypto in their life. Right? Like we're teaching them how to stake. We're teaching them how to, buy OHM and deploy TVL and all these types of things. So there's a lot of education, but it's refreshing to see. One, new money, new people, new mindset coming into the space. It also shows that there's still a long way to go, both from an education perspective and definitely from a user experience perspective, because the on-chain user experience today is still not where we want it to be.
Yeah, it's amazing you're bringing new users in. And I know that's been one of your criticisms of the past of DeFi and Summers and things, that it was, just a few whales farming and leaving, or it was just the ecosystem participating. And I think you have a good point. There's a really interesting post on Twitter today that said, okay, Bitcoin's back at 71K. When it first hit 71K in March, the Coinbase was one of the top apps in the App Store, and now it's number 400, as in we have a long way to go. We still need to onboard people into this ecosystem. Yatsu from Animoca Brands, who's a regular guest here, always says games will bring the next billion users. But do you think it could more likely be real world assets that bring it?
I think Yat's a visionary, and he definitely has a very clear picture in his mind about how Web3 gaming can bring that next billion users. I have no doubt about that possibility. And it's if you have a few different options, I would put it up there as one of the better bets. That being said, obviously we feel like the amount of people who can benefit from just tokenized assets on chain is almost everyone in the world. I mean, whether it's myself, my parents, my friends and family, or it's someone in developing world who has a smartphone in USDT or USDC in their wallet, literally it's open to everyone, right? I think, I was at an event at KBW, and Chris Dixon, general partner at A16Z Crypto, was talking about how he felt. This is at the Story Protocol event. He was saying how he felt that IP could be blockchain's iPhone moment. I believe that IP is a real world asset at its core when you tokenize it. It's one of the real world assets. It's $1 trillion opportunity in and of itself. But I actually feel, more broadly speaking, that generalized real world assets or tokenized assets will be blockchain's iPhone moment, when all those different products we just talked about, all those different things are accessible in the palm of your hand at any time, anywhere in the world. And not only can you invest in them, can you trade in them, but you can, lend them, you can borrow against it. You can do all the different types of financial primitives that you would need in your day-to-day life in the palm of your hand, from an iPhone, from a smartphone, wherever you are. And that, to me, is the 0 to 100 opportunity more than anything.
Yeah, that makes a lot of sense. And yeah, we're actually investors in Story Protocol and big fans. I'll have SY in here in the studio soon.
Nice. SY's a good guy. I like SY and Jay-Z. They're awesome guys.
Yeah, amazing vision of where he wants to take this. And they've been triple down by Andreessen. I think invested now in 3 different rounds, taking it from like 200 val last year to 2.2 billion this year in just an up round. So yeah, it's going to be really interesting, and really interesting to hear you mention that IP as well as being something that's on your horizon. Question for you: you got Dubai. You obviously know Hong Kong really well, and Hong Kong's making all sorts of great moves when it comes to the regulation of crypto. And then of course there's the US. The US is, I don't know if it's the holy grail, but it's a huge market. And, we're days away from a potential regime change, which could see the Robinhood CEO become the next SEC chair. It could see the president have his own, DeFi token. and you could see changes there really fast. I'm curious what you think will happen in the U.S. and will that be the biggest market or not necessarily?
Investment Club. Today, I consider it the best investment that I've ever made. We get 4 projects presented a week by their associated CEOs. Personally, I'm completely blown away by the quality of these projects, and I know of nowhere else where I would be given this same opportunity. Each week that passes, I feel more appreciative of the fact that I'm a member of this group. The vibe was just tremendous. Everybody's on the same wavelength. We just clicked. Everybody listened to each other, enjoyed their company. It was just magical, magical. Take action. Don't take my word for it. Due diligence you need to do. And I really hope that someday down the road I see you in the club. It far exceeded expectations, without question.
It's a good question. And, obviously it's a highly charged political environment. I was just in the States and, people are going crazy. I'm American myself, so it is a crazy time, not just for Americans, but for the world. And, without saying whether either candidate will be better for crypto, I do think it's actually more relevant about who are the people that are surrounding the presidential candidates. So who's in their cabinet, who's really progressive and forward thinking on this technology, because these are the people actually doing the work, right? I think that's really important. And of course, it matters who's the ones writing the rules and enforcing the rules. So, I think we can most assuredly say that Commissioner Gensler will not be completing a second term, irrespective of the administration that comes into power, in just a few months. And I think really that's what matters for crypto in the United States at present. That being said, regulatory change, legislation change takes time. And people in crypto tend to have very short-term mindsets about pretty much everything. It's like a get rich quick and forget everything real quick if it doesn't, immediately give you that dopamine hit or that fix. And that's just not how regs work. Right. That's just not how regulators are meant to operate. I mean, they're meant to be honestly risk adverse. They're meant to take their time and they're meant to do what's best in their opinion for the retail populace. So even if there is a change, even if, we have a shift in the SEC and the regulator there, it's not like, you're going to snap your fingers and this is just like, oh, great. Now it's all, all hell's loose, like let's go to the moon, US crypto. It's going to take some time. And that's not the end of the world. I mean, I think the fact that we're having this as a significant talking point in a presidential election for the US is a massive win for the industry. And over time, particularly as, younger people start coming into power who have grown up with this technology and are completely immersed in it, that's when we really see the proliferation. So that just also makes me more bullish on the longer term of the space. I mean, like, I know that my future, votes will be going to pro crypto candidates. And hopefully, I mean, who knows? I might even run at some point, and I'll definitely be pro crypto if I was ever to go into some sort of a political office. Only if I need to, though.
Wow, be careful what you say. I ran to be mayor of London in 21 and 24, and it was a very sobering experience going into politics. But I think everybody should do it once.
I can imagine.
So I got a PhD in political science, that's for sure. So yeah, look, I agree with you. Although I don't know, there's rumors that Gary could get promoted to Treasury Secretary and start, Operation Choke Point 3.0. So I think it does matter, but I respect your answer there for sure. Want to ask you about something. Raoul Pal, who, is a guy a lot of people follow in the space. He's been on the show. He said once that RWA needs a layer 1. And I know you've quoted him before. Obviously, I guess that's what you're doing at Mantra. Why can't we use ETH? Why can't we use Polkadot? Why can't we use someone else? And do you see other competitors out there? Why will Mantra win?
Sure. Great question. I mean, you can. The short answer is you can. People are tokenizing things on Solana. They're tokenizing them on Sui, on Aptos, on Polygon, on Avalanche. These are all great protocols and are having, very unique ecosystems that they're developing as well. Ethereum as well. But I do feel like there are some fundamental flaws, maybe in this strategy, not necessarily in the tech. I think the tech itself is highly commoditized, and that's not really the differentiator of what we're trying to achieve. Again, we are focused explicitly on tokenization, explicitly on RWAs. I know I don't like the term RWAs, but that's our focus, right? We're not focused on gaming. We're not focused on NFTs. We're not focused on any of this stuff. It can be part of the RWA, ecosystem that's being developed, but it's not the focus of what we're building. We feel the tech is going to be highly commoditized. I believe it's already highly commoditized already. And in the end of the day, if you get to that, iPhone moment for RWAs, you won't even know that you're interacting on a blockchain anyway. So who actually cares? What we want is to be the ledger of record for real-world assets, where issuers feel like they have the right tooling, the right technology, and the right safety and trust. Really, it's all built on trust to be able to issue real-world assets with a click of a button very easily. And they know that if something is going to go wrong, they know how to fix it, or we know how to fix it. And I think I said this at Cosmoverse last week. There's a reason that people tokenize on Mantra, and it's because, they literally, if you're putting hundreds of millions, billions of dollars on chain, you want to know what's going to happen if something goes wrong, right? You really actually do. And, the reason that they trust us is because we spent time, effort, building a relationship, building credibility, building a reputation that persists ourselves. And, people then know, hey, if something goes wrong, literally the CEO of these issuers can just say, hey, I'm going to call John. And they would, literally. We talk regularly. And you're not calling Vitalik. You're not calling Tully. You're not calling these other guys because that's not their focus. And not only do we have that level of trust and that level of access to us and to the senior leadership and, to our team, but we're also focused on the two key issues that I think no one's really solving. It's not a technical issue, right? Anyone can create this technology. It's really a distribution problem. And that stems from where's the liquidity coming from? And it's built up over time. Bringing on new capital into the space, like I said, that is a grinded out process. Takes time, takes relationships, takes network. And I think it's going to stem from here in the beginning. That's the best bet in our opinion. But the other thing is, where are the secondary market venues that these things can actually trade on? Where are the other applications that these things are composable within? We're taking an application first approach in the sense that we're building some of this infrastructure. We're getting licensed by Vara, as you mentioned, or as I mentioned before. And we're focusing on this idea that, hey, it's all great to, create some unique tech, but in crypto, anyone can fork open source code. You cannot fork a regulatory license, right? And that's a really important thing. That's a unique advantage. It also helps that we have, significant backers and supporters in this region that are all aligned with the mission of bringing real-world assets on chain at a retail, at an institutional, and at a sovereign level. And those three things have now become aligned for the first time, in my opinion, in history. And, hopefully they'll be doing that on Mantra. Actually, they will be doing it on Mantra. Let's put it like that.
Great explanation. Look, we've been an investor in Mantra since the beginning of the year, just for full disclosure.
Thank you for that.
And I spent time with you and the team in Singapore a few weeks back. And each one of the members is really impressive. And you got up and spoke at this event, and you said something that really resonated with me, John. You said to everybody, it's not the tech, it's the team. And I've never really heard anybody in crypto ever say that, because, I don't know, maybe it's because traditionally in crypto, there is that reverse engineering. Maybe, look, I'm an MIT engineer geek myself. Maybe people, they love the tech so much that it becomes something that you get fascinated with and maybe obsessed with. But you got up there and said, it's not the tech, it's our team. Anybody can do the code and anybody can try to do RWA, but it's our team is why we are winning and we're going to win. First of all, did I quote you right? And can you explain that a bit deeper?
No, you definitely did. And it's definitely a deep belief that I have. I think it's incredibly important to create an environment both within your team and also within your ecosystem that has a unique culture. In the end of the day, I'm young. I've been an entrepreneur for several years, but not nearly as seasoned as others. But I really feel like one of the things that I learned very early on was that culture is everything. People matter more than anything. And having a strong team by your side can get you through the ups and the downs of this like roller coaster journey that you're on. It's hard enough being an entrepreneur, let alone in crypto, which is obviously highly volatile, prices, everything. And, there's nothing that you can do. And the market might tank and everyone's sad now. But nothing happens and the token spikes 20% and everyone's happy. It's like totally out of your control, but being able to have the team that's not just there for that purpose, but actually they believe in the mission. They believe that they're creating something of value. It's something that we've been very cautious and I've been very intentional about building within Mantra. I still have we're about 90-ish people now within the team, grown a lot this year and will continue to grow into next year. And I interview every single person that comes into the company, everyone. Whether you're an office admin and an intern. So far, I literally have talked to every single person. I want to continue to do that because it really matters that honestly, I like you. I have to like you as a person because I want people to be. They don't necessarily need to have be friends, but they need to like each other, respect each other, and be good people at their core. I think that's one of the things that I've been very intentional and very cognizant about. That's been a very unique point of our history. Last year was very tough. We went through a lot, and the team stuck together throughout that, and that's become one of our strongest points. And that also persists within the ecosystem as well. I mean, I think there's so many ecosystems because there's so many different blockchains and infrastructure and things that have not focused on anything related to culture within the ecosystem. It's just, hey, let's give you grants and then you come build. Where's the staying power in that? Right? I actually think that grants are the worst things the blockchain can do because all you're doing is inviting parasitic developers and people to come in, farm you, and leave. But if you create an environment that they want to be there, they're having fun, they're enjoying what they're building cool stuff, they will stay, right? Solana, I think, is a perfect example of that, right? If you look at, people gave a lot of flack to a lot of the projects at Token 2049 compared to Solana Breakpoint because it was just chilling and, retail and whatever at Token. That's kind of the conference in general. It's an amazing, platform, but that's kind of the conference. But then Solana was developer conversations, ecosystem builders, everyone was having a great time. And I think that's something that we want to emulate. And, obviously, out of all, alt L1, Solana's the one to emulate there. So a lot of shout outs to those guys. And hopefully we can do something similar. Yeah,
I'm reminded of a great phrase that the customer experience is a lagging indicator of company culture. And I think it was that guy that used to sell shoes online. I forgot his name. He died a few years back. But
the Zappos CEO, right?
Yeah, exactly. That's him, Zappos. Yeah. And something I always meditate on as an entrepreneur as well. It's ultimately, if your team isn't happy and not enjoying it, it will result in a lousy product. That's just the truth. It lags, might take months, might take years. And also, if your company culture is so good, it's only a matter of time before the customer feels that and buys in. I love your comparison to from Token to Breakpoint, because I had my first Breakpoint at Singapore. And so I went over there and I was like, what is going on here? I mean, the thing that I was joking about, John, is that the CEO of a DEX comes on stage in Solana and he gets a standing ovation. It's he gets so much love, and the CEO of a DEX walks into Token and there's nobody in the room. And so for me, it was they celebrate the people that help them build and give them their liquidity. And a guy pulled me aside and he said, Brian, Solana is all about free speech and free expression. He said, Base might say you can't launch this meme because it's maybe not good for the corporate brand. But on Solana, there's a lot of rubbish, but it's the essence of blockchain, which is freedom. You can do what you want. And there was a vibe, there was excitement, it was a club. You were in their club and they were going to change the world. And I could feel that, even walking around in a 3-piece suit, that this was a vibe, and I finally, I could get Solana. So I know what you mean, by that culture.
Absolutely. I mean, I think it's a really good North Star for us to emulate. And there's so many different projects and builders in this space that, we look up to, or I look up to, founders that I look up to. But Solana is definitely up there. And, now that we are, it's funny because I've always kind of considered us an RWA play, but really we're an L1 play now with the mainnet launch last week. So, hopefully we'll be up in those ranks someday too. Actually, we will be.
So talk to me about, what you called Omtober, and your token is OM. So this was a huge month for you guys. When we spoke in Singapore, it was September, and we were like, okay, wow, lots coming up. Let's have you on the show. How did Omtober go so far? How was the mainnet launch? And then I'd love to dig into a little bit of the RWA suite, because you got about 5 really interesting products, features there.
Yeah, absolutely. So, Omtober was really an idea where we just felt hey, everyone feels basically that October is going to rip. It's, October, rate cuts, US election, maybe a regime change. Everyone felt like October was going to be a crazy month for crypto. So we're like, why shouldn't we?
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.